comment there?
Yeah, I do. I mean, I watched that debate on the OFT comments around charging orders. And my view of that, just having had a look at some stats around numbers of orders for sale, I've got one of my team down here, but there were 622 orders for sale that were actually made in the last year of judicial statistics. And, you know, out of over 100,000 applications for charging orders that were actually issued in the courts, applications issued, and then about 2/3 of those actually ended in a final order for charging orders, and then only 622 ended up in an order for sale. So we really need to put charging orders in context. And what I found difficult with the OFTs, I mean, obviously as a regulator and experts, one welcomes debate on the issue of enforcement, of course. But the problem you see is that it's already been through the courts. And what I didn't see and hear was the Lord Chief Justice commenting. I'm sure the OFT wouldn't put themselves above the most senior law lord in the country. I didn't see the District Judges Association commenting either. And this is where I have a problem, because I feel that regulators are hugely important in ensuring that the law is effective. But it's the judges who carry the burden of whether the law is correct, whether the procedure is correct. And with charging orders, if that is what the law says, and you can issue a charging order application, as you know, for any amount you like. Now, whether the district judge will allow you a final order, that is a matter for him or her. And, you know, I think I've said it on this platform before, we have probably the best judiciary in the world. In England and Wales, we have a common law system of justice that goes back over 1,000 years. Are we supplanting that with regulators who, let's face it, are not answerable to the court? It is easy for them to comment. And it is the judges who make these wise decisions based on a full understanding of the facts with the man or woman who is subject to the charging order in front of them. And this is the sort of argument that I have with regulators, that yes, you have a very important role, but you are not above the law. And the judges are the people that the credit industry should look to for the wisdom of the decisions that are made. And I have to say, in the credit industry, I don't think there is enough reference to the law. I see an awful lot of procedure and process and compliance, but I don't see the use of the courts and the use of enforcement procedures in the way in which judges are helping shape enforcement policy. And that is the sort of thing that's needed.
Thank you, Claire. I think Joanna wants to make a comment.
Just briefly, I feel I ought to add a different kind of balance, I suppose, because let's not forget that despite debt management companies telling people they don't need to worry about going off on holiday and their debts will all be sorted out, and despite claims management companies having a similar kind of rhetoric, the evidence I have from the people, ordinary people in financial difficulty who contact us, something like $250,000 a year, is that most people, and there will always be some people who abuse any system, but most people, the vast majority of people, want to pay their debts back, actually. They want to get themselves back on an even footing, and what they tell us when we survey them after they've been through the process is they never want to be in that situation again. It was hideous, but they want to their good name back, they want to pay back their creditors, and they want to start again.
So, I'm sorry, I just need to... Yeah, thank you. I think we just move on. There's another question here.
Hi, I'm Darren Hodder from Fraud Consulting. My question's mainly for Simon. Recent statistics from CIFAS indicate that fraud is actually on the decline, which is probably unprecedented. I'm just wondering what your opinion is of this. Is it because fraud really is on the decline, or is it because the industry is better at detecting it, or is it a temporary effect due to tighter lending policy?
Fraud's quite different to fraud risk is quite different to credit risk in my view, because you can build models and use tools on the credit risk that will run and continue to do a reasonably good job. I think fraud's a totally different kettle of fish in that it moves. I think unfortunately there's an element of society that is out there that thinks they can seize banks and other lenders as an open target, and indeed, I mean, the cost of fraud losses, if you added them up over the industry, is enormous. And I still think a lot of it is actually labelled credit, just normal credit losses as opposed to fraud losses. I would say, picking a number out there, probably a quarter of our credit losses sitting on our unsecured personal loan book is definitely fraud. Persons took out that loan with no intention to pay. I think the last 10 years or so has seen a dramatic rise in the fight against fraud in the use of some quite sophisticated tools, both at an industry level and at an individual lender level as well. But some of these fraudsters have made so much money so easily that you close one avenue and they immediately start looking for the other. I or any other person that's been involved with fraud could relate some real horror tales of the ways in which we've been duped. We've been duped by other players in the industry playing their part unwittingly, not deliberately thinking, well, the banks will stand a fraud loss, but the new build sector was a typical example of where some of the mortgage lenders took a real bath because of some of the practices of other people in that chain, in the mortgage chain, and continue to do so. The problem with fraud is you stop one, and it's one of our fraud officers describes it like a balloon. You grab part of the balloon and squeeze it, and so the bulge goes down there, and it just miraculously appears somewhere else. My own personal view is that whilst the banks are getting clever at fraud, they need to be clever at fraud, and that any lull in it is, I think, would be unwise to think that we'd got the fraud question licked and that we can all take it easy here on in.
I agree fully on that, and I think it's really important that we don't become in any way complacent.
Thank you. Do we have any questions over here? I realise I've had my back to this part of the room.
Hi, Marcel from Insolvency Today magazine. Just a very quick question for David. We've been reporting on the amount of work that the OFT has done and taking action against debt management firms. I just wondered if he has a view now whether he believes debt management plans should face statutory regulation.
No, I don't have a view on it. Sorry.
That was quick. Right, next question. We've got one at the back over there.
I will, no doubt I will in due course, but right at the moment I don't.
Okay.
Daniel Hill from Lawson Hathaway Credit Management Solutions. The rhetoric that's coming off from the panel here, bar one or two people, and the rhetoric that comes from the public sector is, felt like it or not, consumers can, if they want to try hard enough, get away with paying what by law they owe. I'm just interested as why no one has seen this as a problem similar to sex education, in respect that shouldn't these people or shouldn't students be taught financial matters earlier on within school, understand what is needed to be paid, understand when they do write a contract that they have to make a payment or make good that payment. We're talking about an issue which is gone out of control now. How do we fix it? Do we not go back to where it all started? Because in my view, that's when you're about 10, 11, 12 and understanding what your mum and dad are doing.
Okay, thank you. We'll start with Ivan and come to Joanna on that as well.
Sure, I totally agree, and I think it's the generation thing, and it's almost we shouldn't have to wait to change for attitudes to change as well. I think back to buying my first house, and I didn't go out for 3 years so I could afford the deposit. Do you see that today? Absolutely not. And do parents help their children by giving them the deposit? Yes, in a lot of cases, but has that taught that child the value of money? And so I totally agree. It's the not the actual cash amount they've got to learn about, but the value of it.
I suspect this is one of the few issues we might all agree on the panel. It would be boring, wouldn't it, if we agreed on everything? But I'm pretty sure we'll agree on this. I used to be on the board of a charity called PFEG, Personal Finance Education Group, which teaches teachers to teach financial literacy in schools. Something we and they have been campaigning for a long time, which we still haven't got, is for financial literacy to be part of the national curriculum. My husband's a deputy head of a secondary school, and he will tell you, as pretty much any other teacher will, that if you don't put things in the curriculum, they don't get taught. They've got enough things to worry about. So, you know, if we can go away from here and think, well, actually, the next time I see a politician, I'm going to say to them, why don't you put financial literacy on the national curriculum? I think we might all agree.
Thank you. There was one thing I did actually want to raise that hasn't come up in the floor debate so far, and that was PPI. I don't know whether the panel would all like to comment on this, but I mean, Ivan, start with you about the recent decisions on PPI made by the banks.
Yes, well, I mean, this was always going to be the arm wrestle that the banks lost. They've won enough, so it's about time they lost some. And PPI was that one that they're probably quite happy to give in on. And I'll say fair play to Lloyds for actually putting their hand up first and saying they give in. It's a shame the others took so long to give in as well. They may have over provision, but who knows. Now, my concern about PPI is that there's two things really. One, customers will jump on the bandwagon and stop paying whether they have a claim or not against PPI that's valid or not, and use that as an excuse. So I think we have to peel that onion and get that understanding with customers. But the other thing is, as customers who genuinely have a claim and do get paid out on their PPI claim, I think it would be a great shame if we can't work out some relationship-driven model that encourages those customers, when they get their payment, to settle their outstanding debt first. Don't just use that money to pay for their holiday, pay for a new car. Now, I know it's going to be a tough thing to do, but there could be some way of making it attractive for them to use that money to settle their debt first. But otherwise, it just pours more fuel on a fire by getting them further into debt.
Okay, there's another question at the back. We'll make that the last one, I think, because we're...
I hear what you're saying there, and I totally agree. Again, it goes down to financial literacy, what customers should do, but I have to insist it's not up to the banks to decide what the customers do with their money.
I'm not suggesting they insist that, but this is where I think we need to be creative, think outside the box, and put something that's attractive to the customers to encourage them to use it for that purpose.
Does anyone else on the panel want to comment before we...
Can I just add one thought on PPI? I mean, I suspect if we wanted to talk about PPI, we could be here for another hour. But just one thought, because we were talking about this before we came in to join you. And the worry I have about this whole thing is the trust that has been lost. Because actually, customers need this kind of product, and perhaps not so much on the unsecured side as on the secured side. If you look at the proportion of people who take MPPI, it is scary. And if something goes wrong, they have got no barrier. So, you know, you think about when you take out a mortgage, you have to take out buildings insurance, but you don't have to take out MPPI. And I don't think any government at the moment could force that through because of the trust issues. So it seems to me that, you know, there's lots of point scoring we could do, but actually what we need to do is sit down with banks, with government, with consumer representatives and work out how do you put something in place that protects people, that's a reasonable value, that won't be missold, and that actually works for people.
Thank you. Fantastic. Well, that's all we have time for. Thank you for your questions. We'll just quickly go back to the voting technology and see if anyone's changed their minds. So, number 1 for very optimistic, number 2 for optimistic, 3 for neither optimistic nor pessimistic, 4 for pessimistic, and 5 for very pessimistic. And here comes the music again. Okay. Oh, well, some people have really changed their minds and become very pessimistic as a result of this debate. Yeah. So I'm not sure we helped very much. All that remains for me is to thank our speakers very much for coming. It's been really illuminating to hear their views today, and we very much appreciate them taking the time to do so. So please join me in thanking them.